Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy and specifically to talk about the deficit that is now building in the Russian budget. But before we get into that, a couple of points of order. Firstly, I changed the lighting recently on my second channel, which is Joe Blogs 2. If you haven't subscribed to that, please do so. I posted a picture yesterday of me with a green background and a video with a green background. And a lot of people said, hey, I really like that background. It's a lot easier on the eye than your normal purple background. So you may have spotted that I've lightened the background here. So it's now lighter blue. Hopefully that is a bit easier on the eye, but let me know in the comments whether or not you think there's any difference or if I should lighten it further, because I want to make this a pleasant viewing experience. Also, if you haven't subscribed to my two new channels, Joe Blogs 2 and Joe Blogs Travel, please do so. Joe Blogs 2 is probably going to be rebranded as Joe Blogs Experience soon. It's a bit like the Jimi Hendrix Experience with a lot less guitars. Anyway, the point of today's video is to talk about the Russian budget, and it's just been announced by TASS, the Russian news agency, which is authorized by the Kremlin, so not me, that the budget deficit in Russia for the first 5 months of this year, January to May, is now running at 1.5% of GDP, and this is significantly higher than the Russian authorities were expecting at the start of this year. And if you've been watching the channel, you'll know that I recently posted a video talking about Russian revenue from their exports. This chart, which you'll be familiar with if you follow the channel, shows the amount of revenue from all of the different fossil fuel sources. And as you can see, over the past 3 years since the start of the Ukraine war in February 2022, there's been a significant decline in revenue. And in 2025, we're seeing an acceleration in that decline. And I shared the figures with you that were also provided by TASS, not me. These are not my figures. These are the official figures coming out of the Kremlin. And you can see that the value of the exports fell in all 4 regions. So it was down by 4% in Asia, 11% in Europe, 11% in Africa, and 10.4% in North and South America. And the total reduction in the first 4 months, so this is only to April because we don't have the detailed figures to May, is that Russia has seen a decline of $8 billion in its revenue, so that's 6%. And it's also importing more, so it's spending more on imports. That was up by 1.7 billion, or around 1.8%. And it's now been announced that the deficit for this full year has been increased. So previously, Russia was expecting to have a deficit of somewhere in the region of 0.5% of GDP. But at the beginning of May, they announced that they were increasing that expected deficit to 1.7% of GDP. But when you're announcing that the first 5 months, you're already at 1.5%, that tells me that the 1.7% looks way short. It looks, if Russia carries on as it is at the moment, that it's going to come in somewhere around 5% of GDP, which would be 10 times higher than the original budget expectation. And of course, the reason why Russia is suffering a huge deficit at the moment is because of what's happening with the price of oil. This chart shows the movements in the price of URALS oil, which is the main blend that Russia is selling, dating back to 2021. And you can see here that at the start of the war in Ukraine, at the beginning of 2022, Russia was selling its oil for around $100 per barrel. And that was actually a long-term high. And the reason for that was because there was a lot of turmoil in the international markets. The price of oil across the board went up, and that pulled up the price of Russian oil, because Russian oil is selling at a discount to general prices, because if you can buy oil from the USA and Russia at the same price, then as a country, you're most likely to buy it from the USA because there are no issues attached with that. There's no problems with regards to the sanctions or making payments or any difficulty that you may be causing your own economy. So Russia has to sell its oil at a discount, but it still trades somewhere close to the general market price. But as you can see, over the last 3 years, there's been a serious fall in the value of Russian oil per barrel. And the most recently reported figure for May 2025 is that the average price that Russia is now selling its oil at is $48 $8.92, which, if you've been following the channel, you'll be aware that the price cap set by the West was implemented at $60 per barrel. That was the maximum that Russia was allowed to earn from the sale of its oil. But with a price of less than $49, the price cap is now completely redundant. It's irrelevant because Russia is earning less than the West was prepared to allow it to earn. And the reason why this is a major problem is because Russia earns around 40% of all of its revenues from oil. So when the price of oil halves, as it has done for Russia over the past 3 years, that means that your income is also halving. And if you've been following the channel, you'll be aware that Russia's expenditure has gone up materially over the past 3 years as a result of the war in Ukraine. It's basically spending an increasing amount each year on that war. And so when your revenue is going down and your expenditure is going up, your deficit is going to increase. And that's exactly what's happening with Russia at the moment. It's reporting this trade deficit. But more concerning from Russia's point of view is what I reported on recently is the fact that China is actually pulling back on its purchases of Russian fossil fuels. So we saw in this press release from TASS, the official agency, not my figures, that in the first 5 months of 2025, China has reduced the amount it's purchasing from Russia by 8.2%. And one of the reasons why China is doing that is because the West is continuing to apply sanctions against Russia. A lot of pressure is now being applied against Russia to agree some sort of peace deal with Ukraine. And the USA have said that if President Putin doesn't agree some sort of deal soon, then they're thinking about applying a 500% tariff on any country that continues dealing with Russia. And clearly, that would have a massive negative impact on China because the USA is its biggest export market. There's a lot of going on at the moment trying to agree a trade deal between Donald Trump and President Xi, and we've got all these tariffs that have been bouncing around over the last few months. Nobody really knows where we're going to come out, what the final numbers are going to be. But China knows that the USA is a very important market for it. So it needs to make sure that it continues to have access to that market. And a 500% tariff would basically close the whole business down. Nobody would buy anything if a 500% tariff was applied to Chinese imports. So what we're seeing is China gradually starting to pull back on its dependence on Russian oil. And that's bad news for Russia because it doesn't have that many other buyers, and certainly not buyers of the size of China, to be able to find new markets if China did decide that it was going to pull out entirely. So we've got a double whammy here. We've got a general fall in the price of oil, which is impacting the total revenue that Russia's earning. And we're also seeing China reducing its purchases, and it's the biggest single buyer of Russian oil. So Russia is now concerned that going forward, it's going to have less revenue whilst it's continuing to spend a lot more on the war in Ukraine. Now, if you're running a deficit, if I put this to you, if it's your personal situation, if you're spending more than you're earning, how are you going to fund that? Well, the first thing that you turn to is your savings. If you have any savings, you can start dipping into those and making up the gap. And that's exactly what Russia is doing at the moment. So it's been announced that it's planning to dip into its national wealth fund to fund the deficit. So the deficit at the moment is running at 1.5% for the first 5 months. That's $3.4 trillion that Russia has run up as an overdraft, essentially, which equates to around $44 billion. It's $3.4 trillion rubles. But yeah, $44 billion. So essentially, Russia is now having to find that $44 billion from somewhere, and the National Wealth Fund is its go-to place for funding all of its expenditure that isn't covered by revenue. And this chart shows the decrease in value of the National Wealth Fund in Russia dating back to 2021. You can see that back in those days, Russia had lots of liquid assets. It was running at around 14 trillion rubles. So, fairly healthy balance. However, over the past 3 years, Russia has continually been depleting those assets. And the most recent figures that have been announced show that the National Wealth Fund is now sitting at 3.3 trillion, which is around $39 billion. So at the start of the war, I reported that the National Wealth Fund had around 150 billion US dollars equivalent. it's now down to 39 billion. So that's a massive reduction. And when we're talking about a 44 billion shortfall in the first 5 months of 2025, obviously, if Russia was going to dip into the National Wealth Fund to cover that, it doesn't have enough. It hasn't actually got enough in the National Wealth Fund to make up that gap. Now, Russia is hoping that the price of oil is going to go back up. And so the deficit will even itself out through the rest of 2025. They're hoping that the full year outcome will be 1.7% of GDP compared with the 1.5% that it's at the moment. But if the price of oil doesn't pick up, if oil continues to sit at the current levels, then Russia is likely to see a full year deficit somewhere above $100 billion. And clearly, they don't have enough in the National Wealth Fund to be able to cover that. And one of the other problems that Russia has at the moment is that the price of oil in rubles is now down to a 2-year low, and it's 40% below the budgeted level. So the budgeted level was 6,726 rubles per barrel. However, the most recent figures showed that the price of oil in rubles is 3,900. So that really puts into perspective why Russia is so short in terms of its cash, because it was expecting to get a lot more cash and a lot more rubles into the bank than it is doing at the moment. And this is a real problem from Russia's point of view, because they're not in control of what's happening either with the price of oil or the purchasing power of the ruble. This chart shows the movement in the value of the ruble over the past 12 months. This is the exchange rate between the US dollar and the ruble. And you can see that in 2025, we've seen a huge appreciation in the value of the ruble. So at the start of the year, one US dollar was trading for more than 110 rubles. It's now trading for less than 80. And in normal circumstances, when your currency appreciates in value, that's good news, because it means you've got more purchasing power. It means you'll be able to buy more things, you get better value for it. However, the problem that Russia has is that nobody's accepting rubles as a form of payment. China and India, its two biggest trading partners, have refused to deal in rubles. They simply won't accept it. So even if the value of the ruble continues going up, it isn't actually benefiting Russia. They're not buying more things, getting more value for their ruble in the international markets, because nobody's accepting it. So the fact that the ruble has strengthened isn't proving to be a benefit for Russia. Normally speaking, this would be bad news for its exports, because it would be making these exports more expensive. But as I said, the value of the ruble is irrelevant. Nobody cares about it. So even though a lot of people attribute the value of a currency to the strength of an economy, you can't do that in Russia at the moment, because the ruble's becoming a redundant currency. So what's the summary and conclusion today? Well, I wanted to post this video as a follow-up to my previous video, because previously we were just talking about revenue, and obviously revenue in isolation doesn't really tell us the full story. It just tells us how much money Russia is earning, and we know that that amount of money has been going down significantly. And one of the biggest causes for concern from Russia's point of view is that China is now reducing its spend on Russian exports. But what we've talked about in today's video gives us the full picture. We are now looking at expenditure and also the revenue. And what we've heard from TASS, the official news agency from the Kremlin, is that in the first 5 months of 2025, Russia is running a budget deficit of 1.5%. And that's increasing because of the fact that the price of oil is going down. Oil is the main form of revenue from Russia's point of view. So when the price of oil falls in the international markets, that hurts all oil exporting nations, and particularly Russia, because it's got a 40% dependency in terms of feeding its internal budget. So the price of oil is down, but also Russia's expenditure is up. If you've been following the channel, you'll know that Russia increased its expenditure on defense to more than 6% in the recent budget. And that compares to a lot of countries in the West who are spending less than 2% at the moment. So Russia has a high percentage of its GDP being invested into defense, Not surprisingly, because it's in an active war at the moment. This isn't just defense for defense's sake, as we're seeing in a lot of other countries where they're just gearing up and building up their arsenals and making sure that they're ready for any form of conflict. Russia is actually actively engaged in warfare right now. So, whilst it might be spending on things like missiles and jets, they're actually using them. So they need to replace what they're using. So this isn't just building up for the future. This is actually spending on an ongoing basis. And that's one of the reasons why the expenditure is increasing. And what we've got at the moment in Russia is an imbalance between expenditure and revenue. Revenue is going down and expenditure is going up. And that's leaving a hole in the middle. It's deficit. And that deficit is being funded by the National Wealth Fund. But as we've seen in today's video, the National Wealth Fund is now running dry. And if Russia was actually to use what it's got in the Wealth Fund to actually fund the budget deficit, it doesn't have enough. Now, Russia is hoping that the price of oil will pick up in the second half of 2025, and therefore its revenue will go up and the gap will reduce. But when you look at the outlook at the moment, what's going on in the global economy, I don't think it's certain that that is going to happen, because we've still got the spectre of Donald Trump's tariffs hanging over the global economy. Nobody really knows where they're going to come out, what that impact is going to be on global trade. But the World Bank recently reduced its forecast for global GDP for 2025. And I think realistically, the second half of 2025 is likely to be as uncertain as the first half. We're likely to see concerns continuing to rise because we've got these tariffs in the USA, which is going to increase prices and potentially reduce the growth in the USA economy for the rest of this year. We've also got problems in China, where it's struggling to hit its 5% growth targets. If you follow the channel, recently posted looking at the latest data coming out of China, and we're continuing to see deflation. Prices are going down. Producer prices are falling at a rapid rate, and they've been coming down for almost 3 years now. And a lot of companies in China are making losses, and they've now got uncertainty in their biggest export market, the USA. So the signs are telling us that it's likely that the global economy is going to continue struggling for the rest of 2025. And when the global economy struggles, oil prices tend to stay low because demand is lower than it would be when things are booming. So if the oil price does stay low, that's going to continue to reduce Russia's revenue for the second half of 2025. That means that the deficit will be getting bigger than the 1.7% forecast by the Russian authorities. And Russia could come out the end of this year with a deficit of more than $100 billion. And if it does, it's going to have to find a way of funding that. Now, the National Wealth Fund isn't sufficient to do that. So realistically, Russia will have to increase taxes. It will need to take more money from its citizens and companies to fund that deficit. And if it does that, that's likely to lead to a slowdown in the Russian economy, because increasing taxes reduces the amount of money circulating in the economy. People have less to spend, so they pull back on spending. Companies earn less, so they report lower profits, and all of that reduces the amount of growth in your economy. So the overall summary of today's video is that what we've seen in the first 5 months of 2025 is that Russia's revenues are down, its expenditure is up, so its budget deficit is now running at a high level, almost the full year forecast for 2025 after 5 months. And if oil prices continue to stay at the current levels, that's going to cause major problems for Russia. It's going to run up an even bigger deficit, and it will need to find a way of funding that deficit because it doesn't have enough money in its National Wealth Fund. So hopefully you've enjoyed today's video, you found it useful, informative, and thought-provoking. That's the point of this channel. If you've liked what I've said, then please give me a thumbs up, or give me a thumbs up anyway, even if you didn't like what I said. Thank you so much to everyone that's supporting me. If you bought me a coffee or sent me a YouTube super thanks, genuinely appreciate that. Thank you so much. I'm not getting as many as I used to, but thank you to everybody that has sent me one. And if you're a long-term supporter, either through Patreon or YouTube membership or Buy Me a Coffee membership, thank you for that support. Really helps to keep me going. And here's something to put a smile on your face.